Good evening. Good evening. Yes, let's get the ball rolling. As I was saying that I will deliberate for the next 30 minutes on the presentation that we have, and then we'll take questions in the last 30 minutes. Let's engage. Let's interact. It's all about trust, and let's try to unpack the concepts of trust as one of the instruments that can be utilized to create and preserve and transfer wealth to the next generations. We always know that we find it hard to preserve wealth. And I think also, before we also jump onto the session, for those who have, I'm going to quickly also take 60 seconds to share with you what we started. We've got for those who are already also familiar, we formed what we call financial wellness ecosystem, basically. So, which is where what's going on? Okay, just hold on, just bear with me. There we go. So if you can see the screen, we started what we call financial wellness. And I think that is important to ensure that we actually assist each other in creating and preserving wealth. The ecosystem is more membership-based, if you are interested, and it's divided into 3 categories. And you're more than welcome to send me a WhatsApp and to ensure that you are part of it. It's starting with 300 per month, and there's 700 membership, and then there's a 700,000 membership. Why is the financial wellness important? It's exactly why we're going to be touching and learning about trust also, mainly because we found that financial wellness in all holistic, it's very, very important. Why is it that wealth for most people does not get to the second generation? Guys, the truth of the matter is that of us who are working every day trying to create wealth, is that 70 to 80% of us, our wealth is not going to get to the next generation. Why is it the case? People fight for the money, taxes, we don't comply, the penalties, and we've got issues of legals, and we don't sign the right contracts, or for that matter, we don't pay our bills, and then we are not even able to transfer properties to the next generation. If I may challenge you, how many properties in the township that have not even been transferred and still has been owned by the grandparent who passed on 30, 40 years ago? It's quite many of them. And over the years, then that value of that property end up losing value. We also know that some of us passes on because, we pass on having had multiple kids from different partners. And then as a result, some conflicts erupt upon our death. And then that actually destabilizes the issue of transferring wealth to the next generation. So it could be many variables, but the importance of this ecosystem is to ensure that we actually address and obviously arrest those issues so that wealth can be able to take care of us when we're still alive, even at our retirements, and then can be able to take care of the next generation. Preserving wealth takes creating it takes wisdom, and we all agree it takes more than just merely creating wealth in order to keep money. Money is the most difficult thing to actually preserve it and keep it. You can agree with me how complicated it is to actually keep money. Okay, so but we need to ensure that's exactly why we're stressing so much about financial wellness ecosystem, is because we're trying to assist and work together to ensure that we're preserving this wealth. In so doing, as Tax A to ZA, we play our humble role by ensuring the financial literacy skills of our members are polished. Yes, and we're going to be doing this. You will see that there'll be various masterclasses. If you're part of the ecosystem, we'll bring experts. And it's not only centered around property investing. We're also starting to look at what other things, debt management, financial budgeting, savings, retirement planning, all these things that are necessary for financial wellness. How do we bring them and bring the experts into this cohort to ensure that they assist us in preserving wealth? Also, How do we bring those guys who specialize in the likes of unit trust and the high dividend yield to ensure that we're able to utilize trust? I mean, I always get a question by my clients, say, Shile, but what type of asset should I be putting in a trust? And that's what we're going to be unpacking going forward to say, how to ensure that we assist you who are forming these trusts to ensure that you are able to utilize them efficiently. Do you even have endowment policies? Those are some of the things that, do you even know if you've got life insurance policies, where is it going to be paying out? Are you giving it to that child? How strong is that child when it comes to financial literacy? Those are some of the things that we're going to be assessing as long as you're a member of Financial Wellness Cohort, right? In doing so, we update and provide them with tools through access to our senior personnel, various experts, training, and customized risk assessment. It's exactly what I just alluded earlier to say. We'll be bringing different types of engagement, different types of writing and content to ensure that your skills is upheld, and also we're assisting you on this journey of creating wealth through other various products. It could be property being anchoring us, but the truth is that we're going to have to start exposing you. How do we bring guys who are into share investment, the stockbrokers in this field, people who are really dealing with derivatives? How do those things work? What are these private equities that only the wealthy are able to be exposed to? Why don't we have a meeting with some of these venture capitals guys and say, but if we wanted to participate in the venture capital environment, what should we be doing? Who knows? I mean, you could be buying properties and then you say, listen, I'm about to retire. I don't think I can manage my properties. Have you thought about that? To say, you might reach an age where you say, you know what, I'm too old to be running around with tenants. I want to sell all my properties and consolidate all my money and give it to the venture capitals firms or private equity firms where they can invest on my behalf and I get all these dividends while I'm on my retirement. How do those things work? How do these private equity and venture capitals, and that is a journey that we're going to be embarking on as cohort for financial wellness. And is exactly that, because as much as we know that we're anchoring because of a property, because it's easier to enter into a business through property investing, guys, it's quite easy. So the question is then, how do we then take that money and then replicate it with these other high income earners? I mean, private equity, that's where most of the wealthies are actually creating money. How do we enter in that space? Okay, so we need to engage the players in that space, asset managers, fund managers. How do we interact with these guys and understand the world? We aim to offer our members investment opportunities for an easy wealth creation journey. Above all, we're building an ecosystem of financial wellness activists. Exactly that what you're trying to say. So welcome. Those who will be joining us, welcome you in advance. You're more than welcome to decide on which package you can enter in. So there's membership benefits for beginners where you attend all the deal assessment masterclasses, investment opportunities get to be given as a priority to you. And expert masterclasses, you also get opportunity to attend those type of experts masterclasses that we'll be having on a regular basis, only 300 per month, right? Then there's what we call intermediate membership. It gets you also 10% discount on financial wellness workshops. Our financial wellness workshops, guys, goes beyond just being a talk shop. We avoid being a talk shop. We ensure that our members, when they leave those workshops, their life have changed. We ensure that you go there having done certain assessments so that by the time you leave those workshops, your life has changed. So including things like life file. What is life file? How do you put it together? We ensure that before you even come to our workshops, you have done that. So that is why our financial wellness workshops are quite different, right? Of course, then it also gets you those update masterclass. Guys, the legal and tax environment changes like ridiculously. So you need to ensure that you're up to date with all these things if you want to preserve and create wealth. That is just a reality. Also, you've got 50 minutes monthly support where you can pick up a call and say, Shile boy, I've got personal issues. Can we talk? So that is what this middle ground it gives you. Okay. And then the ultimate one, the ultimate activist, is basically gives you everything, including where you are able to attend one financial wellness workshop per year, which is necessary if you are interested in ensuring that you've done your proper estate planning And then we've also have a compulsory annual estate planning consultation where I take you back and then I analyze you. For those who have got interest, I've just recently been accredited as a financial advisor. Now going forward, I can be able to talk about financial products. I'll be showing you guys how these financial products actually fit in with tax. I had to do that because when I've been advising my clients on tax, I've always been limited. Things like, let me give you a scenario. You partner right now with your colleague and you buy a property and you form a company where you're 50-50. God forbid, what happens if that partner passes on? How will you buy that person out? Because if, let's say, you don't have a trust and then you both own shares directly in your names, when we're winding up the estate of your partner who passed on, you either have to buy that estate out because the shares in that company will form part of estate. How would you go about buying your partner out? This is one of the things that we are picking up in the industry that people don't think about that. So we are able to then form things like buy and sell agreements, and it's a financial product. So I knew how to structure things, but I couldn't advise people on financial product on what could actually protect partners in those contexts. So that's why I end up having to go about doing the financial advisory so that I'm able to freely speak of tax structuring and financial. So during the annual estate planning consultation, also I'll be looking at my cohorts and these activities holistically to say, what's going on in your life? Give me this. What's happening what's your position in terms of income tax liability? If you're to pass on right now, how much are you going to owe SARS in such a way that you might think you've got money, but when your family is winding up your estate and you find that you actually left your family with nothing because most of your debts are going to tax, because we all know that once you pass on, it's considered that you've sold your assets, and that's how painful it is. It's what we call deemed disposal, and then you must pay all this income tax and capital gain tax, and you must also pay potentially estate duty. Do you even know what's your potential estate duty? So these are some of the things that I'm going to be doing with the guys who are at this cohort. So that is 1,000 Rand per month. I mean, sorry, yes, the 1,000 Rand per month if you're taking all these opportunities, exactly this. And you also have this 15 minutes monthly support where you can pick up a call and call me and say, Shilipo, let's have a Zoom quickly. I've got issue. I may enter into this deal with somebody. What's your take on these things? Okay, so that is basically that. We're gonna jump into our trust for tonight to teach you guys the principles of the concept of trust. And then if you're interested in joining this session or joining this cohorts financial wellness ecosystem, you're more than welcome to send me a WhatsApp on 074-589-6439. Most of you guys who are here, you pretty much already know my number. I'm sure you've got my email addresses. That's how you end up, but you're more than welcome to send me a WhatsApp, and then I will definitely engage with you after this session. Now, let's look at what also brought us here, which is the concept of a trust. And you know, a trust has been an instrument that has been so utilized by many people, and in such a way that it has been so much linked with people with money. And the truth of the matter is that trust is not only for people with money. Anyone who's actually is able to form a trust can actually undergo and form a trust. It can be used for various things, and it can be, you can take a testamentary trust, you can take special trust for those kids with special needs. How many of us are from families with kids that we know that they need care for whatever reasons? They could be handicapped. How do you ensure that should you have those type of kids, they are well looked after upon your death when you're not there? Because you don't want the situation also where these kids, you leaving them with wealth and then it end up being under the control of the legal custodians, where we don't know, because people can have a good heart, but you find that they don't have strong financial skills or literacy. And then as a result, they end up misappropriating or losing that wealth. But if you form this trust in such a way that even the trustees that you appoint are people that are equipped or are people that are knowledgeable in this running and investments, and especially legal, operational of trust, and also in ensuring that they are able to invest the trust assets, because that is very important. Because it's pointless to have a trust that is having R1 million, but it can't grow in value, right? Because then the administration fees are going to just eat into that capital asset that is sitting in the trust. Same thing as a company. When you've got a company, guys, you want to ensure that this company also grows. It grows in value. And the beauty with trust is that then you're able to be forced to appoint the trustees, and then you've got opportunity that during that time when you're appointing those trustees, you're appointing people with skill. It could be legal, it could be tax, it could be in financial advisors who are able to say, this money that is sitting in the trust, can we not give it to fund managers? Can we not give it to private equity? Or can we not maybe give it to some of these insurance companies that could give us opportunity to invest in certain products? Okay, so I already gave you highlights of what you can do and how to think when you're forming a trust, okay? And some people can form, like I said, testamental trust. Others, they decide to have what you call living trust because you're investing in properties, or for that matter, you've got money. Let's say you've got 5,000 on a monthly basis, or 2,000 or whatever. And then you say, Shilipo, you know what? I'm going to have a family trust. Then every month I'm donating so much, or I'm donating 50,000 every year. And that money goes to unit trust. And those unit trusts are owned by trust. That's how people create family wealth, by the way. Then all those dividends and returns that are coming from these things, and they just enter into trust. They already take some of these type of products, high income dividend yields and things like that, and then they immediately then get distributed through conduit pie principle. You see, when you talk about those type of principles, then it is able to take care of these beneficiaries that you would have thought about. You see, that is just movement of money, and that is a smartness way of ensuring that the little money that we have is able to be preserved as much as possible, right? And that is key. Hence, I'm emphasizing the concept that trusts are not just for the wealthy. Trusts are there to be utilized. As long as you are able to afford the maintenance of them, you could actually have a trust, okay? Now, let's engage. Let's go on. So you and I can agree, and these are some of the structures that we are familiar with. There are more than other structures out there. Every country has different types of structures that people uses to create wealth and hold and preserve and transfer wealth using. These are some of the structures. It's not the whole list, but these are some of how we are used to create wealth. You and I, we know that we create wealth using our names. We grew up having what you call sole proprietors, sole traders, if you're familiar with that. That's exactly it. Some of you guys have bought properties in your names. Others, now that we've got stokvels, we grew up, our parents having stokvels, but now they're getting momentum because there's big stokvels in properties, farming, all these type of things. There's one word we call SPVs. People are saying, what is this SPVs? Is it even existing? Or it's just a word that has been coined? And their funds, their REITs, their foundations, their companies, their trusts, their partnerships. These are all different types of structures out there. There's NPOs. There's so many structures. One that lost relevance was close corporation. It disappeared, right? So all these structures exist for different purposes. They serve different purposes. Others purposes you could find them in all these type of trusts, structures rather, or others you may find they've got benefits, others don't have benefits that others have. So you just need to understand what is suitable structure for yourself. When you're creating wealth, you just need to ask yourself, is company necessary for me? Is stokvel necessary for me? Is the trust necessary for me? Is the partnership necessary for me? All these things you need to ask yourself, okay? Because that is very, very important. How is these structures relevant? Or should we just be investing in your name? What are the benefits? What are the disadvantages? Those are some of the things that you need to continuously ask yourself, okay? And otherwise, then if you don't do that, you might find yourself on the back foot, not knowing why you registered a company. Because I can ask you, why do you have a company? No, because I want to buy a property. But why? Why company? Why not in your name? Why not through partnership? Why not through a trust? You understand? So the moment you understand the why, because then you are able to utilize all these structures efficiently. Even compliance doesn't become a nightmare. It doesn't become a grudge thing because you know why you formed what you formed, right? So let's learn to ask ourselves all these critical questions. Okay, now let's go back to, because then we're going to take and zoom into trust. And so that we understand this concept. Now I gave you all these different types of structures that you're probably gonna come across. Then let's quickly look at structure called a trust. One of the biggest notion that has been there for a very long time is the separation between control and ownership and the enjoyment and economic enjoyment. When you form a trust as a founder, you form it for the benefits and enjoyment of beneficiaries. You could be one of them. And that's key, right? Now, when it comes to inter vivos trust, which is a living trust, which is a trust that you will typically be exposed to as long as if you want to create wealth and discretionary trust, then the control and the ownership is bestowed on trustees. Why is this thing so important? It's so important in such a way that you don't want to be the founder who does as they please and ignore the legal responsibilities and the very notion of control and the ownership having been bestowed onto trustees. You don't want to render your trustees irrelevant, especially now with all these changes and SARS and Master of High Court zooming into the trust world. You don't want to find yourself running a trust like your extension of yourself. Therefore, you could render your trust what we call an alter ego, therefore not even existing. Therefore, if you were to be sued or a divorce, all these trust assets can even be made to be part of your divorce settlement because you would have not respected this very notion of separation of power. Just see it as a separation of power. I think in politics, they always like saying there's a separation of power between political parties and government. So see it in that you as a founder are a political party and then the trustees are government. So respect that relationship. You could be finding yourself as the president of the party, but still in the government, right? The same way with you being a founder, you could still find yourself being a trustee. That's where you'll have an element of a little bit of control. But then you don't have control in entirety because you must act jointly with other trustees. Whenever certain things has to be done, you need to discuss with other trustees to say, guys, we want to buy a property. Okay. One can propose and say, we want to buy the property, and in the main, it will be that main trustee who's tasked to run the trust and create wealth. Will say, guys, we have to buy a property. Okay, sharp. You have to buy a property. Let's task you to go out there and then look for opportunities. That is typically what will then, and then resolutions must be written out for that decision. You document in the minutes. The fact that you documented in the minutes does not necessarily mean the decision has been taken. Guys, the decision to be taken in trust world has to be reduced to the resolutions. Similar to companies, guys. Decisions in companies, when you form decisions in a company, they must be reduced into resolution. The resolution must be passed. You cannot just say, no, we agreed, but there's no resolution. Please, guys, let's do the right thing. Even when you are working, guys, 9 to 5, you probably know that when decisions are taken, they're written somewhere. That's the resolution, those documents. Why not do it in your trust? Because why? Those things are going to protect you. Should someone wants to sue you, or should SARS want to sue you, or for that matter, should someone want to take away your company or your trust, you could justify that you run your businesses with respect and you followed the law to the T. Okay? So, and it's very easy, by the way, to do all these things that we're talking about. It's not even, it's just right. You just write and say, we pass this resolution, then they sign, and all of the trustees, they sign, then you guys move on. Okay? Very easy. It's just that we tend to ignore that administrative part of things because we just want to move. We just want to create that wealth. So let's respect that. So this is something that is very, very, it's a fundamental of trust. Once you respect most of the things center around this framework. Once you understand this, trust me, and you respect this notion of separation of control and the enjoyment, economic benefits enjoyment, you will definitely, I'm telling you, you're on the right track of ensuring that you're preserving your wealth, because that is exactly what is going to help you to preserve wealth. Okay. Now, one of the things when you're going to be trustee and then also as a founder, you need to be clear why these things is very important. It's important because when you're sitting as a trustee, you need to understand the intentions of the founder. Even you as the founder, right? Even you as the founder, you need to be clear of your intentions of creating that particular trust. Let's understand the creditors, because you don't want to find yourself being personally liable for creditors because you never respected the trust, or you never respected the company, by the way. You know the thing in companies in law where they used to call it a piercing through the corporate veil. It could apply also with trust. Most of the same legislation that you will find in companies, as much as they don't directly follow the same Companies Act and things like that, they tend to be similar. So what I'm trying to say is that respect trust the way you respect companies. That's basically saying. Understand what is the role of the Master of the High Court in relation to trust. Understand what is the role of SARS in relation to trust. And you, as the trustee, what is expected of you. Please ask yourself that. And that's why it's so important to ensure that you've got an independent trustee like ourselves who understand the functioning of this Master of a Court, SARS, and all these things, is able to observe and ensure that there are no conflicts. You will see here the family fights. You ensure that there's an observant of the trustee to avoid all these family conflicts. Trust me, people fight over money. Money, it's money is real. When money is there, when the money is created, trust me, there are going to be conflicts. So you need someone who's sober-minded to actually come and independently observe that, to ensure that these files are actually preserved and this conflict of interest are managed. Also, you who is a trustee, you could be a trustee and beneficiary at the same time. Please ensure that you manage your conflict of interest. We are humans. There'll be a time when decisions have to be taken and you're conflicted. Disclose and recuse yourself from such activities, because otherwise you might find yourself being personally sued. Equally so, you must always aware that you are acting in the best interest of others. Others, who are those? Beneficiaries. And you can see that you as a trustee is there, your role is to protect these beneficiaries if fairly. The same way as a director in a company, your duty there is to act in the best interest of the company. And if you're doing that, you're effectively acting in the best interest of the shareholders. Are we in agreement? Right? So these are some of the things that you need to ask yourself, guys, as you are creating this wealth. Get used to reading, now and then just page through and say, what are the role of the master when it comes to trust, the independent trustees? Just read that and there, just read and ask questions, ask for meetings with trustees. Make sure that trustees are involved, make sure that it's the same way when you're a director of a company. How many of us have got companies, and the last time we read those MOI, Memorandum of Incorporation. When last did you read the Memorandum of Incorporation? Since you formed that company with CIPC. If I were to ask you what it says about the meetings, would you be able to tell me? And that's how we end up finding ourselves into trouble with companies that, and we're failing to actually even preserve wealth to the next generation. So let's ensure that we do the right thing. Administratively, we strengthen our admin to ensure that we preserve wealth, guys. Okay, that is how we're going to uphold and make sure that our financial literacy skills is actually sound and clear. Very simple. Read. Attend free webinars that some of us are hosting. Follow us on our social media, engage, be part of our WhatsApp groups and ask questions. There are a lot of, some of us are creating very, very free thing. Over and above that, maybe be part of the financial wellness ecosystem, because then there we monitor people closely. There's a separate group, by the way, WhatsApp group that we created for financial wellness ecosystem. They attend certain master classes that we don't share on the main WhatsApp group. If you're already on that WhatsApp group that has over 350 people, there's other WhatsApp group. There's another one WhatsApp group for the guys who took on the membership. Okay. So now let's move on. So what have we learned through the courts is that people don't understand the trustee. The same way I asked you, when last did you read your MOI? The same way. When last did you read your MOI? You've got companies, guys. When last did you read it? It's the same thing with trusted. People don't read trusted, because MOI and a trusted is those internal documents that actually helps us to govern and run these entities. So when last did you read your trusted? Please, let's read trusted. In those trusted, you will find that there's a minimum number of trustees that needs to exist in those trusts. Do we even know, are we even aware of that? Right. Are we even aware that the sub-minimum of trustees cannot bind the trust? You go around entering into transactions, but then you will not be able to meeting the provisions of the trustees. You will find yourself personally being liable, because the trust cannot enter into the transactions if it does not even meet in the minimum number of trustees that is required according to the trustee. So if you don't know that, can you agree with me that you're going to make mistakes? Especially if you're the main trustee, so-called main trustee, you're more, and you don't even consult other trustees, you're most likely going to find yourself making those type of mistakes. Okay. That's why it's so necessary. That's why even the Master of High Court decided that, because they've seen that trail, there's, people have been taking each other to courts. They said they need an independent trustee, an independent outsider in family business trust. Family business trusts are those trusts that the trustees and the beneficiary are one and the same people and are related to each other. And those trustees, they can actually enter into debt transactions. Exactly what you guys are forming, where you are trying to create wealth through property investing. So you'll be required to have an independent trustee, someone who can whip and someone who can observe and ensure that other trustees observe and respect their trusted. That's exactly what the expected role of the independent. Because some of these founders, they don't engage trustees, or for that matter, other trustees, you find that is those silent trustees. You cannot, in this current climate, guys, be a silent trustee. It's the same way you are a director. You cannot be in a directors and you're appointed as a director, and when you just go to a meetings and you keep quiet, it doesn't work. Engage and state your views when it comes to these roles. It's very, very crucial, guys, that you don't become silent trustee, or you don't even become silent director. Wherever you are, guys, whether it works, wherever you are an executive in your 9 to 5 and you get appointed to a subsidiary of the company, and then they make you director, or those employees shared trust where they require you to be a trustee and you're just quiet and silent, you just rubber stamp the decisions that have been taken. Guys, please rather resign. Rather resign from those responsibilities in those corporates, because you're going to find yourself in a very difficult dilemma. Okay. What we're saying is that legal personality, we all know that trust doesn't have legal persona, right? Why are we saying that? We're saying when you contract with the trust, you contract with the trustees, not the trust. Trust does not exist. The trust estate is bestowed and is controlled by trustees. If you remember the very notion I said, the control and the ownership of trust estate is by the trustees. However, those trustees don't have economic benefits rights unless they are also beneficiaries. You get it? It's a very funny concept that it's very difficult to make sense of it. It means a trust can't go out there and sue. When you sue trustee, and trustees sue on behalf of the trust. That's basically what transpires. Okay. So hence I said it vests on trustees, administration is by trustees. Guys, let's make sure that you act jointly. Like I said earlier on, act jointly. Don't go there and do as you please, and ensure that whatever you are making, the decision you are making, you are empowered by the trustee. You don't do things that the trustee is not permitting you to do. Please, because otherwise you will find yourself legally being liable. Okay. What we're finding is that the trustee buying the trust estate, exactly what I was saying. So whatever decision that you're permitted by the trustee, if you make this decision based on that as a trustee, then those decisions will bind the trust estate, which is the wealth of the trust. Okay. So now what we're saying is that if the trust does not have that minimum or the capacity to act, does it mean the trust ceases to exist? No, it doesn't, but it cannot enter into new transactions, new relationships. However, the obligations still needs to. So what we're saying is that the remaining trustees needs to continue paying debts, taxes, all these payroll, if there's a need for payroll, municipal payments, if there's a need for that, you just need to ensure that they continue the remaining trust, but they cannot contract and enter into, which means that the sooner you fix that, the better, because then if you wanted to buy a property with that trust, it can't, because it doesn't have the capacity to contract. Do you get it? So let's make sure that we understand that we don't find ourselves in deals that they don't even go ahead because we don't have the capacity to act on behalf of the trust. Okay. It's important to act. Have you heard it even when you're a director, guys, where they're saying you must act independently and ensure that you're making your own sound decision, and you're independent, you in mind and appearance. It's the same principles with trustees. Even trustees, we expect you to be independent in terms of judgment, right? It's very, very crucial that you act independently of other trustees and you exercise your own judgments as a professor. So it's the same concept you'll find in trust. In companies. When you're a board member out there, guys, some of you guys are going to do well and become board members of companies out there. Hopefully you'll remember some of us and tag us along with you so that we can earn all those big fees. You don't go there and just be yes, ma'am. Rather resign, guys, out of those boards, because you'll find yourself at the state captures one day because you are just signing and remaining all these yes, ma'am, and all these things. Can you be a trustee when you're sequestrated? So, and the primary responsibility for compliance with formalities and for ensuring that the contracts lie within the authority conferred by the trustees lies with the trustees. Where is this thing coming from? It's coming from the concept that the trustees used to just enter into transactions and then will claim that the third party should have been aware that the trustees were not empowered to actually enter into that particular transaction. So what is happening here is that now the courts are realizing that people don't read, people do outside of their powers. So they are pushing this back to say, you as trustees, you need to have known that you've got authority conferred by the trustees, so that it's your responsibility to know that whatever the transaction you are entering into, you are actually empowered. It's the same thing with companies again, guys. Can't go around. Otherwise, these things will move back to you, right? You go around entering into company transactions, and while the company is not actually authorizing you to do that, you'll find yourself in trouble. So let's read. As long as we create, wealth requires people to read, guys. In order to preserve wealth, you're gonna have to read. Okay, let's move on. Okay, now what are the common mistakes that we are finding in practice is that founders are acting without consulting other founders. They just decide, and next thing they call you, Shilipa, I want you to sign bond documents. So say, you want me to sign what? No, you can't do that. Let's have a meeting. What's going on here? Who gave you authority to go out there and find this property deal? I'm not signing. You understand? So you can't go around acting without consulting other trustees. You are also not doing anyone favor. You are just the one who's going to lose wealth. Okay? And let's ensure that we let go of this sole notion of control. If you're so obsessed with control that even retaining control in your trusted, I can assure you are not going to preserve wealth. So let's respect it. If you can't, then don't have a trust. Don't form a trust. Don't form a trust, then just continue with the company, but just know that then that money, that wealth that you're creating will form part of the estate, will form part of divorce settlement, should it be considered. You can be sued, all these things. It's very difficult to wind up estate these days. Things are not functioning. The less you engage with government agencies, the better. And so in so doing, the more you separate things from yourself, the better. Okay. Lack of trusted compliance. People don't read trusted. I cannot stress enough. It's a similar thing with companies. When last did you read your MOI? Okay. So people do everything, they form trust, but well, everything else remains the same. What we're saying is that someone will come and say, Shilipa, I want to create a trust, but then they move properties into the trust. Nothing changes, but then the money for the rental still goes into their personal bank account. That is a sham trust. You basically just created trust and doesn't exist. They consider that doesn't exist. So as a result, should you divorce, we all know that you'll do all these things and your partner can be happy, but the day he divorces you, he might want to call in there and say, but my wife was actually getting all this rental into a bank account. Her trust was never compliant. And therefore, this thing is a sham trust. It never existed. It's exactly the same. So it's a concept say you create a trust, but where everything else remains the same, you basically still remain in the way you used to even before, or you have never even formally transferred those assets into that trust, but you claim that these assets belong to the trust. So that is not going to hold the water. Courts will not entertain such. Okay. Ignoring the central notion, acting on the best interest of that very notion. Remember the framework. That's exactly what it's saying. People ignore that. They do as they please. Where the control resides with beneficiaries, especially when beneficiaries are the trustees, it just becomes clumsy. Okay. That's exactly what I was saying earlier. Let's make sure that these things don't happen with us if you're interested in preserving wealth. But if you are YOLO, what is the meaning of YOLO, by the way? Living what? But it has to do with being a bit reckless, being young and all these things. Yes, you get what I mean, YOLO, something like that. Yeah. So if you're interested in not preserving your wealth, then you can ignore all these advices and just do as you deem fit. So what we're saying is that, so since the courts have found that there's a lot of conflicts, people don't respect them, the very notion of the trust, and they are losing their meaning, they're losing the value and all these things. They issued the court recommended to the master to say, do something about this thing, because the trusts are losing that very notion from the olden days, the very same reason why trusts were created. And then in 2017, the master responded to that court. I think this court judgment was around 2014, if I'm not mistaken. But if you're interested in that court, I can send you the case. And they said those family trusts where the trustees are beneficiaries and beneficiaries are related to each other, and trustees could enter that transaction as per the trust instrument. Exactly what you. Then you need an independent trustees. That's what we call family business trust, where those trusts can buy properties in with debts. You can form other debt transactions. You could be owing municipalities to take on creditors. Then you need an independent trustees, right? And I think also what had to do with this thing, the primary responsibility for compliance with the formalities and for ensuring that the contracts lie within the authority confines. Because the trustees will come and say, but yes, we entered into this transaction, but this transaction cannot be entered into. When they realize that this transaction is actually not sound, they will say, no, but the trustee did not approve this transaction. So that's where it's coming from. Also, this all this independent trustee thing recommendation, it's coming from there. There was a court where these trustees claimed that they didn't have powers as per trust instrument, and the courts realized, these trustees are starting to do as they please. We need to do something. Okay, it's one of that's how these how legislations get developed over the line, guys. We're about to come to close. You can put all those questions on the chat box, and I'll be taking those questions. And then also, then if you want to talk, I'll be opening up the you just raise your hand, and then I'm gonna pick you on you, and then you ask questions. We engage. And before I even forget, we are running a special on trust with one of our sister company. Yes, and then I think it's about 5.5, including a company, holding company. So if you're interested to form a trust, you can let me know, and then we'll register it with our sister company, Intergen. So yeah, so you're more than welcome to let me know. But then, yeah, also don't forget about the financial wellness ecosystem cohort to join, and then, yeah, cool. So that's exactly like what I was saying. What is this independent trustee? Most of you guys always ask me, what is this independent trustee, Shileboy? I mean, I can tell you about the functions as per the master's directive. You can ask me for those documents if you're interested in reading as a bedtime novel. Then you can read what the roles and the responsibility of the independent trustees are. And then, so they say no need to be a professional. You don't need a professional, but I mean, this is where it's a very contradicting thing, because if they're saying you don't need a professional, but then they're also saying this person is responsible, is a realization that trust functions properly. How will someone who's not even good up in the trust administration be able to tell if the trust functions properly? And also to ensure that the trusted provisions were observed, and also that the conduct of trustees who lack sufficient independent interest in the observance of substantive and procedural requirements arising from the trustees can be scrutinized and checked. Let's just be honest. You need someone who understands their framework. It's like saying you want to appoint someone as an independent director, but you don't want someone who's clued up on governance matters, and it's not gonna fly. Okay. Failure to observe breach of trust, cause ensures that trust form is not abused. What is this trust form? Is exactly what I was saying, the separation of the control and the ownership and the enjoyment. So there's no blurring of the lines. Okay. So these are some of the things that if you read the directive from Master in the one was issued by March 2017, you'll see some of these things. I will just simplify them in simple English so that you are able to know what are some of the expectations. But I must be clear that in law, there's no distinction between normal trustees and independent trustees. All the trustees are seen as one and the same thing. This is just a way of describing someone who's not a beneficiary and it's not related to the other trustees. That is basically what they're trying to just distinguish. It's like independent directors. in companies, basically. But in law, all of them are held liable equally. Same way with directors, okay? So the conduit pie principle that some of you guys might be familiar, which is one of the brilliant benefits of having trust, is the fact that if, let's say, your purpose of investing in these properties is to look after these little ones, or for you to be able to travel and live a soft life and just unwind and dealing with or staying away from load shedding, then we all know that it allows you to take the money into the trust, because it will be generating those rental income, and then the money gets distributed to various beneficiaries, and these beneficiaries could in effect enjoy the benefits of having their own medical aids, starting retirement annuities, tax-free investments. These are some of the things that the kids, it's another way of passing on wealth to the next generation, by the way. Some people can end up doing that. Or if you are wealthy already at that point, you could end up even creating trust for these little ones, and then it becomes a benefit. That's when you are really wealthy now. You're trying to now passing on wealth to the next generation. But as a kickstart, how many of us paying tax-free investments using our own money that is after tax? How many? And we're taking this tax-free investment for our kids. It makes no sense. So why not invest one asset or so, and then it distribute here, and the little ones are the one who's supposed to be paying tax, but then because they're sitting probably at the tax-free threshold, then they don't get taxed technically, and then they take this money and then they pump it into tax-free investment. Again, they're building this wealth. By the time they reach 18 years old, they've got that 500,000 has grown in value, and then they're able to then use that money as a kickstart for their lives, whether buying their first asset, and they can use structures by then, or for that matter, they're able to go to university using that money. But you would have just used 3 properties in the next 18 years to build up this wealth for these little kids. You see how simple it is to create wealth just by using this simple strategy here. Just buying these 3 properties here, knowing that, you know what, I'm not a property investor, Shilly boy. I'm not. But I'm just going to take advantage of my affordability. And then if this money is coming in here and each kid here is getting about 3,000, right? Say every month, each kid get 3,000. That's 30K per roughly in 10 months. That 30K can easily go into tax-free investment for the next 18 years. That money can be a kickstart for these kids. And then they could sell these properties because we'll be old, we're not interested in managing these properties. And then we distribute this capital again to these little ones as a kickstart for them. They get taxed when they're starting to work, and then they buy cars to go to work, and then they do articles because they don't struggle, and they don't have to struggle with finding a car to be an attorneys or advocates and doing all these articles. That's where most people, you see how simple it is to prepare for your kids. Very simple. And over that 18 years, you'd have minimized tax here by just simple strategy like this. And then you pump all this money, instead of giving them directly, you pump it into these investments for these kids. But remember, your aim is not to be a soul. You are not everyone is going to be a fully fledged property investor. If we're being honest, we're investing in these properties for different reasons. What if my reason is to ensure that these little ones, they're able to take care of their own medical aid, they are preparing for retirement at the young age, they also have these free tax investments, and then at the same time, maybe they've got unit trust investments. Simple. Keep it clean. Simple. At the beginning, you just keep it that way, saying, no, I just targeting maybe 3 or 5 properties for the next 18 years. These kids are able to kickstart. Imagine how many of us guys, if our parents did all these things, and then some of us wouldn't be, I remember when we were doing articles, you have to wait for people to come and fetch you. and you're waiting there and it's winter, you're cold. It's just so stressful. By the time you get to a client, you're not mentally okay, if I may use that. Right. You're not warm, you're frustrated. But I mean, I obviously don't blame my parents. I mean, apartheid did happen, guys. But we've got an opportunity to simplify this life for this generation that is coming. Not everyone is going to be a billionaire, but you can at least give them a kickstart. And a simple kickstart could be exactly this, just to get 1 or 2, 3 properties that pumps in here. You reinvest all this money back into other endowment, the high dividend yield, all these type of investments that are out there. Exactly what you're asking, what other assets can I use? Not everyone is going to be a property investor, guys. And we'll be getting some of the experts, if you're part of the financial wellness ecosystem, on teaching us on what other investments are out there that we can put into individuals or trust. We can rechannel money from properties into these type of products. Exactly that. So anyway, so then after that, once it's distributed here, then only then we are able to pay SARS where it's applicable. We must always respect SARS, guys. Trust me. That is one guy you don't want to mess with. You don't want to mess with SARS. Can make your life a living hell. Cool. Now let's move on. So remember I said, guys, be aware of what is happening with trust, with the Master of High Court. So be aware that changes. What governs the Trust Property Control Act? What are the changes out there? You know, SARS, what are the requirements? You need a bank account, must ensure that you've got asset registers, you know, taxpayer. You are registered as a taxpayer for the trust and all these things. Just be aware of the changes. Same way you must be aware of the changes around companies, guys. Companies' environment changes, same as trust. So be aware. If you're going to create wealth, be aware of what is changing around you. Because what is working today might not work tomorrow. You agree with me? So we live in a world that is a moving target. So just be aware of what are the changes. And it's always important to surround yourself in an ecosystem that all people are clued up of what's going on, right? Otherwise, you're going to lose wealth, okay? That is basically that. So that is what I wanted to say with that thing. Oh, not bad for today. So we did well. I think we started with the presentation at around 22 past. So well done. Let's take the next 15 minutes or so asking questions. Let's check also on hello, say in South Africa, do we have, what is that? Ghostwriter. What are you saying? What is the spendthrift trust? What is that? I don't know what is the spin. I'll be honest with you. I don't know what you're talking about. I'm not sure what is a spendthrift trust. I'm not familiar with that. Okay, let's see. Okay, there are no questions on let's do this. Let's look at what questions we have on chat box. I'm gonna try to, okay. Komotso says, Pila Trust joint venture. You can't make any movement. I wouldn't say it's a joint venture. It's completely different to joint venture. Let's not try to confuse each other. It's not joint venture, it's the trust. It's the same thing with company, guys. If you've got other directors, you still need to consult with other directors. We're just dealing with this thing that most people, when they start companies, they do as they please. So it's just that we are emphasizing that because people have been neglecting that. Not necessarily that it's a joint venture. Brian says, I'm not sure what you're saying, Brian. You only live once. Yeah, thank you so much, Komut. That, I always knew that it has to do with popping the bottles. Brian says, what are your monthly and annual duties for the independent select? That's exactly what I said. If you saw the slides where I was saying the trustees, the independent trustees helps with making sure that the other trustees follow the laws and all these things. You basically coordinating the trustees. Yeah. What is the max amount company can donate to a trust? A company can only donate about 10,000. Yeah, a company can only donate at 10,000 per year. Komoza says, as the main trustee, is it possible to cancel the contract with trustees and appoint new ones? Okay, so what happens is that you have to follow what the trust is saying. But we all know that if you're not happy with other people, I mean, you can't work with people that you're not happy with. And if there are grounds to remove other people as trustees, you can. But don't go around, because then you're giving yourself too much power. You can't wake up and you're giving yourself tacit power, where you just go around firing people unreasonably. Like, then you are still in charge in a way. And guys, this thing of control, this thing of wanting this control is going to make you guys not preserve wealth. Do away with it. I can assure you that. Because you might think you are doing this thing, but telling your partner, you are married, let's say you're married, you'll be telling your partner, no, let's remove Shilly Boy. Yeah, no, let's remove him. We don't even have to tell him. Just tell him or just tell him to resign. The day you guys divorce, you see exactly what you're deciding in those bedrooms. The day you're divorced, those things are going to be unpacked at the court. That's when the judge is going to say, hang on, in fact, this trust doesn't exist. Be careful, guys. Do the right thing. Do the right thing. If you want to preserve wealth, do the right thing. If you don't, just don't do trust. Just don't do it. Please. That one I can assure you, just don't bother. Just buy things in your name and then let people fight for them when you passed on. Let SARS take a half of it through taxes. Let lawyers charge the fees. Let executors take 4.5% on executors' fees. Just leave it like that, because you are not prepared to let go. You remind me the people who start companies and then they swipe as they please using companies' a bank account. Those people are not ready to run businesses. You don't do that. Do you know that once you withdraw money from the company for personal use, that is dividends by default? Yes. If you don't have a resolution that you pass on what is that is the dividends. So it means you owe SARS withholding tax. That's why most of us, if we get subjected to an audit, we're going to collapse. And especially these days, it's so boring. So if you're serious about creating wealth, respect the legislations, you'll preserve wealth. Whether it's company, whether it's partnerships, whether it's trust, whether it's stokvels, whether it doesn't matter. As every structure, even in your personal name, you still need to respect the law. There are law governing sole traders, right? If I say, for e.g., the beneficiary gets transferred to that money supposed to go to the accounts, or it can remain in the trust because I'm still alive and I'm currently taking care of them. Hey, yeah, you guys love control. You. You, hey. You can retain it in a trust and manage. That's what I was saying. You can retain, you can invest in them and then take that money directly to tax-free investment, and the trustees can transfer it directly there. But then it has to be disclosed to SARS. Okay. That is just to manage, because if father, these are just little kids. But just don't retain it because you want to still use it, because you are saying, your argument is saying, because I'm still taking care of them. That should not be the reason. The reason should be that you are managing the finance on their behalf. Then you're just directly then paying the fund managers through the trust directly instead of going via the account. But then the key thing, compliance here, is that SARS has to be notified. By the way, that's one of the responsibilities of the trustees, is to ensure that you tell SARS what has been distributed to the beneficiary, vested rather, to the beneficiaries. Alina, my questions are, what are the monthly fees of running a trust? It depends on the value of the trust. You're looking at about minimum, maybe for independent trustees, about $550, somewhere there, a month. And then you need an accountant. It depends on how big the work is, the workload. It's also that. That's why I always say, don't do a trust if you are not prepared to come and make money. Don't do it. You're going to get overwhelmed. You can't finance a trust from your salary. You are not ready for a trust. So do a trust when you're already making money, so that the money that is being generated, the income that is being generated by a trust, it can take care of operational expenses. Just see that as operational expenses. Is the trust recommended? What? I'm trying to see. Is the trust recommended for people with a tax rate below 40%? Like I said, a trust can be different. It is for different reasons. So it's not influenced by your tax brackets only. There are people with special needs, rough people, by virtue of somebody getting money from REF, road accident fund. Some of those guys, their money gets transferred into the trust. It could be for different reasons. Some people with special needs, they can't run their money. So you will ideally want to move their money into the trust and appoint people with knowledge to administer the money for them. Okay. So with SARS, we file every year, every 6 months. Is it possible to create a trust if it's not making money income where you will get admin fee from? No, don't create a trust if you're not making money. Don't do it. Why are you laughing at me, Humut? Okay. Guys, it's like, don't form a company if you're not making money. Simple as that. Don't do it. Okay, so those who wants to ask questions can raise their hand, and I can pick. Let's see on YouTube. On YouTube, are you guys okay? You're sorted. Okay, cool. And then who else has a question? Are you guys sorted? Who else has the questions? Can raise your hand if you want to ask a question. Okay, so if there are no further questions, one more thing. If there are no further questions, we've got this opportunity, this property opportunity. Let me see if I can be able to. There's this deal that we are working on. If you're interested, you can, where's this Excel spreadsheet? There's this opportunity here. It's giving us, just quickly, for the next 5 minutes, it's giving us about 11%, roughly 11.5 net on rental investment yield, gross yield of about 25%, and a cash flow annually of about 40K. The property needs about 280. It's a standalone freehold in Katlehong township. For those who are familiar with township, we can, as it is, we can make about six grand a month. And then these are the operational expenses. And we also budgeted this maintenance and vacancy cost on a monthly basis, but it means that we can actually take this and add it to this profit of about 40. So you're looking at about 50K annually. So we're looking at maybe to refurbish about 57K, and then holding cost, and then transfer, because then we don't need a bond fees if we are buying it through cash. So it's quite a decent, and the current value of the property is about 600,000. But then because the family, again, you see how people lose wealth. Now we're speaking of losing wealth. You see how people lose wealth. They're losing wealth because the kids don't want the property. I mean, they moved on. They don't want to stay in township. And they got the property because the parents passed on, and then they transferred the property. They got frustrated with rentals, tenants not paying because they're not there, and they're like, you know what, let's just sell this property and move on. We're in suburbs and all these things. But can you see the difference between 280 and 600? That's about 320 that these kids are losing. And that's exactly what happens if you don't do estate planning, because when you're doing estate planning, it gives you opportunity to also assess your kids. If these kids are cut out, you speak to your kids will tell you that, no, man, dad or mom, I'm not interested in the property space. You sell when on time. You sell, you cash out, and then this family, had they cashed out this property at, let's say, 500,000 back then, and put this money in some sort of a fund, they could be making money where they are right now, instead of now coming to get 280, and they're gonna split these 280, the two of them. I can assure you, then the 100,000 is nothing. 140 that they're gonna get is probably nothing. It's not gonna even spend a year, as compared to if they got that 500,000 over the years and then use this thing to refinance into other financial products and things like that. So that's why it's important to do estate planning, guys. So if you want to join us for this investment, let me know. Send me a WhatsApp, and then we can talk of the terms and things like that. We want people that are going to join forces with us, because the aim is to hold it and then rezone their land so that we can build more apartments in that RF. It's, what do you call it? ERF. Yeah, ERF. We're gonna build more units in that ERF. So, but it can still maintain itself, because it can take care of itself, basically. Even if, let's say, let's put it this way, even if, let's say, we're to get a bond, say, of 280, it can still take care of itself, of the bond. You still get a net cash flow of about 5 grand or so. I mean, it's 5 grand plus these 10,000 here, you're still getting about close to 15 grand that you're getting cash flow. So it's still cash flow positive, even if we go through the bond. But we're trying to avoid going through the bond and just rather buy it cash, so that you don't have issues of dealing with the banks and frustrating the process. So if you're looking at, you are also having interest in investing in township, so you're more than welcome to what do you call it, to reach out to me, and then we can talk. Please, only serious people. Let's have a conversation. It's fairly cheap. It's about 280. So if we get like 4 people to join forces, yeah, It would be nice. And then, yeah. So what is the question? Brian says, I like a spreadsheet. Thanks, Brian. So, yeah. So, yeah. So let's, and yeah, we can. Oh, by the way, the workshops that I don't know if you guys are familiar with the workshops that are coming up. We've got a workshop in Johannesburg on the 22nd and 23rd of July. So I'll be teaching people also how to run these numbers, on how do I arrive at these numbers and all these things. This is a deal analysis. So if you want to come to the workshop, let me know also, in Johannesburg on the 22nd, 23rd of July. Last week we were at 50% capacity, having, because we're maxing the capacity for the workshop. So it's 2-day workshop. So there'll be a day where we're speaking about property investing, running the numbers, where do we get the numbers, how do we estimate the issues of refurbishment, all these things. How do we arrive at them? Where do I get all these fees, the transferring fees? Where do I get these rates and all these numbers? Where do I get rentals, numbers, all these things? So it's multi-layer, this one, there's buy-to-let, there's bond refinance calculators. There's about 4 calculators that we have. And how do I get these numbers here? You see these numbers that I compare them. Where do I get them? All these things. There are notes here. All these numbers, it's notes. I learned this thing when we were doing articles in accounting. So you reference these things with numbers and where. So I've got all these links where you get all these numbers. And then you can play with your spreadsheet, and you're able to make an informed decision rather than making an investment decision that is biased based on emotions because you just want to be in property. Sometimes we just want to be in property, and then we end up making decisions that that are actually more biased because you just want, that thing of just wanting to be a property player. But when you've got numbers like these guiding you, you know that you're actually making more than what you could get if you're to buy a bond, as an example. So then it means you need to contain even your refurbishment must never exist this amount if you want to get the right ratios. You confirm these things. You do a research to ensure that your rental that you're expecting is similar. And how should your property look like in order for you to generate this rental? You ask yourself all those type of questions. And how do you verify all these numbers? What is the more reliable way to estimate these numbers? Those things matters, guys. Where do you get this interest rate? What is LTV? All these things, they matters. How to get this net yield to be able to estimate the property valuation, but how do you compare that with the sales comparison method? Because the valuations model could differ to what the properties are being sold for on the ground. Exactly. Look at it, it says 337, but when you look at in the area, how much properties are being sold for? Are being sold for about roughly like 600,000, somewhere there. So it shows you that this model is not ideal for the area, as an example, or this yield needs to be revisited. You see, and that's how you interpret all these numbers, but then you interpret them using data, using information from various sources. And that's exactly what we're also going to be looking at during our workshop, for 2-day workshop in Johannesburg. So if you want to come through for the workshop, also send me a WhatsApp. And also if you want to participate in this deal, send me a WhatsApp, and then we can have a conversation. Otherwise, I think if there are no longer further questions, thank you so much. I appreciate. And I'll be looking forward to having conversation with you. If you want to join our financial wellness ecosystem, the separate WhatsApp group with its own support and benefits, send me WhatsApp. Yeah, I'm there to have a conversation. Otherwise, good evening and good night.